More like financial detectives, sniffing out corporate wrongdoing. With a keen eye for detail, they meticulously analyze data, looking for inconsistencies and red flags. Founded by Nathan Anderson, Hindenburg specializes in short selling. Anderson, a former ambulance driver turned financial sleuth, has built a team of experts who share his passion for uncovering the truth. That means they bet against companies they believe are overvalued or hiding something big. They take a contrarian approach, going against the grain of mainstream financial opinion. Think of them as the Wall Street equivalent of a pit bull, tenacious and ready to bite. Once they sink their teeth into a target, they don't let go until they've uncovered every last piece of evidence. But here's the catch. Hindenburg doesn't just bet against companies. They take their findings public, sharing their research with the world. They go public with their findings. This transparency is a double-edged sword, bringing both praise and criticism. They publish detailed reports, laying out their evidence for the world to see. These reports are comprehensive, often running dozens of pages, and are backed by extensive research and documentation. These reports can send shockwaves through the market, causing stock prices to plummet. The impact is immediate and often dramatic, affecting not just the targeted company, but the broader market as well. And that's where Hindenburg makes its money. By shorting the stocks of these companies, they profit when the stock price falls. They profit from the downfall of the companies they expose. It's a high-risk, high-reward strategy that requires both courage and conviction. It's a controversial strategy, but one that has made them a force to be reckoned with. Critics argue that their methods are too aggressive, while supporters believe they play a crucial role in maintaining market integrity. Their targets have ranged from electric truck startups to healthcare giants. No industry is off limits, and their investigations span the globe. But their most recent target has put them in the global spotlight: the Indian conglomerate Adani Group. This high-profile case has drawn international attention, highlighting the far-reaching impact of Hindenburg's work.
Hindenburg Research doesn't pick its targets randomly. Their approach is anything but haphazard. They have a meticulous process, one that involves digging deep into a company's financials and operations. This isn't just a surface-level examination, it's a thorough investigation. They're looking for cracks in the facade, signs of potential fraud, or overvaluation. These red flags can be subtle, often hidden in plain sight. Their team of analysts pores over financial statements, regulatory filings, and court documents. They leave no stone unturned, scrutinizing every detail. They interview former employees, competitors, and industry experts. These conversations can reveal insider information that isn't available in public records. They even use satellite imagery to verify claims about a company's assets. This technology allows them to see the real picture beyond what the company wants to show. Once they believe they've found a target ripe for exposure, they take a short position in the company's stock. This is a calculated risk based on their extensive research. This means they are betting the stock price will go down. It's a bold move, but one that can pay off handsomely if their findings are accurate. Then comes the bombshell. They release their report. This isn't just any report. It's a detailed exposé that can shake the financial world. These reports are meticulously researched and written in a way that's easy for the average investor to understand. They break down complex financial information into digestible pieces. They lay out their allegations in detail, often with supporting evidence. This evidence can include documents, interviews, and even satellite images. The impact can be swift and brutal. The market reacts almost immediately to their findings. News outlets pick up the story. The media coverage amplifies the impact, spreading the news far and wide. Investors panic and sell their shares. The fear of losing money drives them to act quickly. The company's stock price plummets. This can lead to significant financial losses for those who hold the stock. And Hindenburg profits from the chaos they've created. Their short position pays off as the stock price falls. It's a high-stakes game of financial chess, and Hindenburg has proven to be a master strategist. Their ability to uncover hidden truths and capitalize on them is unmatched. Their success is a testament to their rigorous process and keen insight. They are always on the lookout for the next big target, ready to expose the truth and profit from it. In the world of finance, knowledge is power, and Hindenburg wields it like a finely honed weapon. Their reports can change the fortunes of companies and investors alike. As they continue to navigate the complex landscape of the financial markets, one thing is clear: Hindenburg Research is a force to be reckoned with.
SEBI, India's market regulator, is now under intense scrutiny. Questions are being raised about their effectiveness and transparency. Can they handle the pressure and deliver justice?
Hindenburg has made it clear they want SEBI to launch a thorough investigation into the Adani Group. They believe that only a detailed probe will reveal the truth and ensure market integrity.
The fallout from Hindenburg's report is being felt across India. The public is demanding answers, and the media is buzzing with speculation. It's not just about one company, it's about trust in the entire system.
The Adani Group's controversies have, sent ripples across global markets. Investors worldwide are now, questioning their exposure to not just Adani, but also to other large conglomerates operating in similar markets. It's a wake-up call, really, about the importance of transparency and ethical business practices.
SEBI, the Securities and Exchange Board of India, has, taken these allegations very seriously. They have launched a thorough investigation to, examine the claims made by Hindenburg Research. This is a critical moment for SEBI, as their response will, set a precedent for how such cases are handled in the future.
Moving forward, the Adani Group will, need to rebuild trust with its investors and stakeholders. This is crucial for the company's future growth and stability. They will have to work diligently to restore confidence and demonstrate their commitment to ethical business practices. This could mean, adopting more stringent corporate governance practices and increasing transparency. By doing so, they can ensure that all their operations are above board and in line with global standards. This will not only help in regaining trust, but also in attracting new investors. For the Indian markets, this whole saga serves as a reminder of the importance of regulatory oversight. It highlights the need for robust mechanisms to monitor corporate activities and ensure compliance with laws and regulations. And, the need for companies to maintain high ethical standards. Upholding these standards is essential for the long-term health of the market and for fostering a culture of integrity and accountability in the business community.
Hindenburg Research's investigation has, highlighted the power of independent research firms in holding large corporations accountable. This could, usher in a new era where companies are more cautious about their business practices, knowing that there are entities out there ready to scrutinize their every move. It's a, significant shift towards greater corporate accountability.